So good morning and welcome to the Weekend Investing Chat.
Thank you.
We are happy to have here Mr. Parag Mehta from Mumbai.
Yeah, I'm in Mumbai. That's right.
You are in Mumbai. Great. So Parag, tell me a little bit about yourself and your investing journey so far, and then we'll go into your association with Weekend Investing after that.
Yeah. So basically, I'm a process improvement consultant. I'm a trainer as well. I teach topics like Lean Six Sigma.
Okay.
I started my investing journey back in 2016.
Okay.
And
So your start was in sync with Weekend Investing's birth. We also started out in 2016 April.
But my start was with mutual funds actually.
Yes, sure.
And I think 2016 or even for that matter 15, whatever I bought basically as a part of mutual funds, that was basically from TV interviews or ratings that you see on Money Control or certain websites. So I just used to buy them based on ratings, and everything worked out fine. I don't remember anything ever went in ever showed me negative returns for the first 2 years at least. So
yes.
I mean, my journey started at a point where I never saw a loss because I was in the middle of a bull run, and
yes. 2015 calendar year was a down year, and then 2016 onwards, post the demonetization, I think we started going up.
Yeah. So I never seen a loss on my portfolio, and I thought mutual fund is. And mutual fund is something like you go book a fixed deposit but with more returns. So I had a false sense of a very. I mean, it's a very safe option to choose. In 2018, I started. I started following you on Twitter.
Okay.
And I used to see your post and your engagement. I mean, the way you used to post something, and so you post a chart and you say this is at near support, or this is going to break out, and then you actually see the reaction happening on that stock. So I really like that, as it was as if you were controlling something. So you're pressing the button and it would fall or it would rise. So I started researching about you. And in December of 2017, I guess there was an article, or maybe in Jan of 2018, there was an article.
Yes. Money Control had published the article.
Yeah, so there was an article where I got even more confident. I said I should try it out this. So my journey in directly buying stocks was in December 2017.
Okay.
And I started with the discretionary allocation, completely discretionary. Maybe based on hearsay or based on what I felt, rather than not a very strong research at that point of time.
Sure.
And I realized that I should take some help from outside, and I joined in at I think exactly it was Feb of 2018.
Okay.
So this was just
small caps
before,
were beginning to crash.
Yeah. So this was before the budget speech. And so I mean, I just joined it at a very I think that point of time it felt a very wrong time to join. And I think after Feb 2018 my discretionary portfolio also took a hit, and plus we were I enrolled for the MI25 actually.
Okay.
So even that was very painful at that point of time.
Sure.
So at the very start.
Yes.
So that was the start of my journey with Weekend Investing.
So were you a sort of a investor who was adding in every month or every quarter, or were you like more of a one-time jump in and then like the 2018 entry that you did, was that like the first installment of your long-term entry into that strategy or discretionary, or were you trying more of lump sum investing at that point of time?
So because I had never seen a loss earlier,
yes,
and I was like, okay, if you get an expert, plus the expert said there's a system and there's a process involved. I was very much like nothing can go wrong, so I just jumped in I mean, even my discretionary was like jumped in, plus my non-discretionary with you was like a jumped in lump sum completely, not thinking of SIP at that point of time. And then I think that was one of the big mistakes I made. But I think at that point of time for the life products, your suggestion for MI25 was about 10 lakhs as a starting point.
Sure.
And I started with half of that. So maybe that was one good thing I did. I started with half of that. And I mean, that was I mean, one of the things difficult for me was to see a loss on the portfolio, which I had never seen earlier.
Right.
And
so I strongly believe that, unless one goes through a cycle of losing money at one point of time, the learning doesn't come around. And you may be making as much money as you want in your upside, but unless you see the downside and unless you go through that pain of drawdown, the appreciation of the entire structure doesn't come to you, really.
Yes. So I remember you mentioned one of, I think this was in 2019, that in your weekend investing journey, it was good that you had a difficult phase at the very start.
Yes.
And I realized that was even good for me, because that made me more modest. And I mean,
that's
I realized
wonderful.
that.
Yes.
So I realized it was good to have a bad start actually, because there were too many mistakes I made. I also tried using a strategy on your strategy, and you always mentioned that you must try that.
Sure.
But it wasn't a strategy actually. So I was doing random things at that point of time, and I was thinking it's a good strategy to add on to what you're doing. So things like I would allocate different amounts to different stocks actually. So if I
so deviating from the weighted allocation of the strategy to the ones that you thought were going to do better.
Yes. So if I make a loss, I say, okay, let me buy a larger amount for the next one. And then the one which you have smaller quantity is good profit, and the one which you have in larger quantity has.
So adding some discretion to a non-discretionary underlying process. So being a process expert yourself, and having seen 4 or 5 years of now investing, 5 years actually, what is your sort of big learning out of this? I mean, besides what Weekend Investing is doing, and your own sort of learning from having done discretionary, having done non-discretionary, having done mutual funds, having seen the processes involved. What is your core learning? How would you want to take this forward, for a long-term process?
So I realized it is actually imperative that we follow what you are saying. I mean, what is basically happening weekend to weekend. And you have named it weekend investing, so that I should check it from weekend to weekend.
Yes.
And rebalance as required.
Yes.
The more I check my portfolio, the more I think, so selling early was another mistake that I made sometimes. I said, this is enough gains. And so I mean, because I thought, this is almost twice of it now. How much can it go more? So I hadn't seen what can happen. So
no, but I totally agree with that, in the sense that a lot of times, a lot of gains that you see on your screen do go away. And in case you have the need, or you can do some splurging on yourself, one should. I mean, taking profits is no harm. But yes, if you are compounding for, you have a goal of compounding for next 10-15 years, and you set aside that money, then maybe not look at that money for short-term gains. But either way, taking a profit also is no sin really.
But you think 2x is good enough, but it goes 5x, then the non-discretionary was always there, but you took a discretion. So I realized so by December of 2019, I realized I should not be doing anything. I should not be changing things the way they are. So following that process really helped me. So, and because I had already seen a loss, I had become more okay seeing that portfolio in negative now. Plus my discretionary was also struggling. So I think I started in 2018, but my portfolio was positive first time in Jan of 2021.
Okay.
And after that,
did you add in the middle, during the downtime? Were you able to add to the portfolio?
I did, yeah. That was
Okay.
mostly for my discretionary ones. For non-discretionary, I
Okay.
always preferred the one-time, because it
One
was a
time.
live portfolio.
Right.
Uh,
Right.
so I used to have that 4% allocation all the time.
Hmm. Hmm.
Uh,
Hmm. Hmm.
from December of 2019, I followed that strict strategy of
Okay.
allocating 4%. I mean, the main learning is, I mean, it was good for me that I made a lot of mistakes early.
Yes.
Uh, and I mean, after 2019, I realized that if I just keep on following the strategy, I should do good. And 2021, I mean, 2020 and 2021 was basically all the gains, and much
Correct.
more gains than I lost in the previous years.
And
So
this time, when the gains came, you were not, you did not feel like taking off the money off the
no,
table, and you've stayed invested, and so within the three different segments that you have invested in the last 5.5 years,
hmm.
how has been your sort of the behavioral aspect, in terms of the mutual fund investing, which is, buy and forget types.
Yeah,
Then you have non-discretionary like ours, where at least once a week you need to do some action or at least watch it. And then, of course, totally discretionary, where maybe on a day-to-day basis you are watching it. So between the three different sort of types of investing, it's a very different emotional approach to each of them. How one is behaving in terms of the ups and downs of the markets, and the confidence one has in continuing that and adding to that. So some light on that, if you can think about, because I'm asking these tough questions from you because you are a process guy, and you would have been able to analyze this much
yeah.
better than many of us.
So mutual fund, the advantage, as you mentioned, is once you start an SIP, you basically don't check it every day. Uh, People don't even see what is their current. I mean, you don't log into that website and check what is the index right now, or what is. I mean, you just see an absolute gain sometimes, and you're okay with that. Sometimes I realized for the first 1 year I never converted. First 2 years, I never converted absolute gains into what is yearly gain or CAGR actually. So basically the advantage they get is you don't check what is in, what is out. So in a way that becomes in a way it becomes emotionless because you're not involved in that process. The only difficult part that happens with you seeing your own stocks is that you can see what is happening with them, and you
Exactly.
start sometimes checking things at the stock level, which is not right. You should check it at the portfolio level.
Yes. Yes.
So I realized that the advantage of mutual fund, if you take that emotion here and put it here, and you start seeing everything at the portfolio level, and I follow you, and I even go beyond that, not just stocks but the complete asset allocation level. I mean, that is once you start looking at asset allocation level and you see, okay, I have put 10% or 20% of my money in equity, non-discretionary, and I mean, you had a very good tweet saying if you put 80%, 20%, what happens to that 80%, and if 20% even becomes 50%.
Yeah.
I mean, you have a very good tweet on this.
Okay.
So I realized then you have basically hedged yourself. You have basically taken care if in
Yes.
case there's a
Yes.
drawdown.
Yes.
So non-discretionary, the challenge is you have to keep on updating yourself. You have to keep on checking the quarterly results. You have to keep
Discretionary,
on
you mean? Discretionary. Yeah.
discretionary.
Yeah.
You have to keep on checking quarterly results. I mean, you will have to. You might see. I mean, you have to read the fundamentals of the for the
Sure.
company.
Sure.
So that's one challenge. I realized this was, I guess, got used to it. You get a message every Friday. All you have to do is rebalance it. You have to buy, sell, and that's it.
So the weekly process is not of any pain as such in terms of
Yes,
execution, or remembering to do this. You get a notification and you do it on Monday or whatever.
yes,
And
yes.
your allocation between these three, have they sort of been equal, or have you moved towards one as your preferred, whether it's discretionary or non-discretionary or mutual funds or any other, and even other asset classes? Are you beginning to sort of do asset allocation beyond equity
Yeah.
into
So
other things?
I think I started following you for gold, as if I think if I don't remember right now. But gold is basically
Not that
the
much, yeah.
topic.
Yet.
So I do that as well. So basically, I have about 30% in equity. So I've taken a safer option and about 15% in gold.
Okay.
And the rest is in very conservative options.
Sure.
But I'm okay with that. So
Yeah.
having seen, I mean, I think as you mentioned, 15% CAGR is something that is good enough.
Yes.
And you should not be monitoring it on a yearly basis. At least give it a 5 years time point.
Yes. 15% is fantastic. I mean, I feel 15% is fantastic. It's not just good enough. I mean, if I were to get 15% from here every year onwards, I mean, I'd be very happy.
So if I would have joined in somewhere like 2020, my expectations would have been very high with
that is the problem actually with the last 2 years of people who've come in. Their expectations is very, very high. And with this kind of market that we have seen, at least for the next 2-3 years, I mean, there may be disappointment in terms of the amount of returns that we may be able to get, or even maybe some global event if it comes around in the next couple of years. So I mean, for the long term, yes, the confidence that you would have seen in the last 2 years would actually, it has really emboldened people that yes, equity is an asset class that I cannot ignore. That is, the biggest advantage to the newcomers. I mean, 7-8 crore new Demat accounts have opened up, or whatever is that number. So, I mean, so many new people have come into the market. So, some bit of a drawdown will help them in the initial. Of course, it will be painful, but it will help them. And experiences like yours who have gone through a drawdown and have still stuck with the thesis and the system, it shows that if you don't run away when the market is down, you can really do all right.
I mean, on one of the things I realized I made a mistake is I used to rant on Twitter too. So if you post something, I would be like, my portfolio is 5% down, and I mean, there are many people who do it. I see sometimes they start writing. They say, "Oh, have you seen this portfolio is 5% down? I just entered 2 months back." And I just saw one of such tweets, and I remembered this is me 2 years back or 3 years back. And I was like, I should message that person. You have to be patient, go through a complete cycle.
Yes.
Because when sometimes people mention, they said we could have sold this and we could have bought this, and so it's like the wisdom of retrospective is flawless.
So I think my sense is that if you can learn in one cycle, like you have, you're doing very well. Most people learn in 2-3 cycles. That every time I'm missing this opportunity, every time market goes down, I cash out, I look for other opportunities, and market goes up, and then I realize that I should have been in equity, and I should have been investing all through. So it takes minimum one, of course, but 2 to 3 cycles for people to really get a hold of it. And in 2 to 3 cycles, if you are able to sort of get a grip on what strategies, what asset allocations I want to do. And then once you have that framework in mind, then you will just keep compounding from there on. I think then you will not even think about it once that process is fixed in your mind. And that takes some time. So, I mean, if you do it in 2-3 years, that's fantastic actually. I mean, it took me decades to get there. So
I consider all my fees only to be the learning actually. The gains are a byproduct.
Sure. Great.
Because the amount of streamlining I have done for asset allocation, understanding at a portfolio level, and in 2018 we could not, 17-18 we could not see you that often, but now we see you very often every day. So that anxiety comes down because we see you more often on daily wise. So I mean that is, the fees is for that learning actually. Not
great. So that's so nice to hear that. So Parag, thank you so much for joining today. I wish I could extend this and ask you also about what improvements or what further features we can add to this, but I'm running short and the next participant is already here. So we'll definitely connect some other time, and I wish you all the best in your journey. And
Thank you. Thank you.
I really wish that you compound very well across all your asset classes and across all strategies, and you keep doing well. Thank you so much.
Thank you. Thank you for having me here. Thank you.
Okay,
It was a
bye.
pleasure talking to you.
Same here. Thank you.